we've seen through the course of the pandemic, the cost of acquisition of onboarding customers has come down quite drastically. But that was also because it was easy. You had a much larger captive base. But what are the choices, for instance, that you have made for the business on scaling up, but not at any and all costs?
A lot of times what happens is that companies will try something and then it doesn't work and they'll quickly pivot. Our view has been the opposite, that you got to focus, you got to hunker down and make sure that you're bringing whatever you're doing to a logical conclusion. You got to make sure that you have a very, very good grasp of what your break-even periods will be like, because that's what's going to lead to profitability and how you go about doing that, right? For us, the three things that are most important to our business from day one and until today are: one, our customers; two, our team, because the team is what's building the experiences for our customers; and three, our shareholders.
You know, and it might sound like an easy answer when to say enough is enough, but I know that this is something that many companies, not just startups, but many companies struggle with. And Ananth, I want to come to you. What is the playbook that you have followed or you are following at Mensa Brands to say enough is enough, or let's not throw good money after bad?
I wanted to maybe, Shireen, say three things. The first is, I think we have a culture and a value of frugality. We define frugality as a value. It doesn't mean being cheap. That culture permeating through the complete organization has been very helpful. I think the second thing I wanted to say is not raising too much capital. It's very easy. I think I've said this before, I think as well. It's evaluation is ephemeral, but ownership of the management team, the founders, etc. is real. So raising just enough capital is important. Raising too much, I think, leads to bad decision making because you want to try and find something to do with the money. The third, I think, Shireen, to answer your question in terms of how do you know and where to draw the line, we actually look at it a little bit in terms of larger irreversible decisions and then micro decisions. And we sort of make those decisions slightly differently. When we decide we want to buy a brand, which is going to be part of the Mensa portfolio, it's really an irreversible decision. There, I think taking enough time, really spending time on what the brand can become and whether we can really generate alpha, and being slow and deliberate about the process is important, right? On the other hand, we do advertising spends and discounting, and there we do it much more experimentally and much more tech-led, because you can sort of constantly innovate and improve, right? You don't have to make that call because you can reverse it fairly quickly. So we make those decisions quite differently. So the enough is enough type decisions, in terms of large ones, we take our time, are very analytical about it, take time to do it. Whereas the short decisions, we do a lot more through tech and a lot more through experimentation.
Well, important point that you made there in terms of bringing in a culture of frugality. And I think one of the side effects of the kind of excess we've seen, the kind of euphoric, rise we've seen in the startup ecosystem is also it builds out a culture of excess. And perhaps that has led to some poor decision-making across many companies. But Srividhya, share with us your playbook, as we've heard here from Bhavin as well as Ananth. What are the areas that you have focused much more on, where you drive efficiency, you drive, costs, you keep a much more laser focus on where the money is being spent, how it's being spent, and where do you provide for a little bit more flexibility as you chase growth?
Yeah, definitely. So in Amagi, our playbook was slightly different from what the other two were talking about, mainly because of our business. So we were entering a brand new business. There is a lot of content creators wanted to reach the OTT market. That's called free ad-supported streaming TV market. So which is like, right now what we see in Hotstar, or what you see in Samsung TV Plus, all those platforms where they wanted to stream their content. So first, we have to be customer-centric. We have to think, when will our customer succeed? If our customer succeeds, Amagi will succeed. And they will have no problems in paying our subscription fee, or no problems in sharing a bit of revenue with us. So we looked at it from that perspective. How do you make your customer successful? And that way, Amagi will be successful. So in some of the cases, we actually helped our customers to advertise their content, right? And we returned money back to them, and we took revenue share. This also we did. This is one of the methods that we followed. With respect to costs, with respect to others, with respect to frugality and all this, having come from a middle class background, the three founders, it is ingrained in our culture. And we wanted to make sure that we spend money on the right things, but we also said one more mantra: fail fast, learn faster. So even if you fail, that's okay, but learn from that faster. This is one of the mantras we followed. The third one we did it is that we are a cloud-based company. So if we are careless, we can be spending, thousands and thousands of dollars in the cloud and, wasting money and not know about it. So we actually brought in a focus on DevOps in the cloud, by which you make sure that, you spend what is really required for the customer. At the same time, do not disallow experiments to be done on the cloud with the new products. That is the way by which we reduced our costs and we helped our customers succeed, thereby improving our profitability.
I like that, Srividhya. Fail fast, but learn faster. Amitava, share with us the key ingredients, the mantras that you follow at XpressBee at this point in time. Similar to what we've heard from Bhavin, Ananth, and Srividhya. What's the sort of moral compass guiding strategy at this point in time?
We have always been frugal in our approach. It's from I think the same culture has flown through FirstCry and XpressBees. And it's very important in logistics you set up that culture, because you run a humongous organization, and unless you are built culturally, for example, directly, indirectly today, we sort of end up employing around 85,000 people on a man-month level every month in, month out. So you have to, if you are driving something, when you are running such a large engine spread across geographically, across length and breadth of the country, you need to drive it. If you're driving frugality, if you're driving cost effectiveness, it has to be driven as culturally throughout the organization. That's number one. Number two is, I think we are very, very analytical. We have set in a number among our managers. We have setting a very analytical, number-driven culture where people look at, people look at costs on a daily and a weekly basis. And the third thing that we have followed is, we have said that, okay, even if you have made a decision, and if you feel, and there could be various circumstances on which, when you are executing on a certain scale, things at an experimental level, things might look different. But when you start executing at a scale, the things exactly do not turn out as it is preconceived. Now, while it is important that at the execution phase you back yourself up, but at least at the leadership level, you should have the ability to stand a little bit at a distance and take a dispassionate and a very neutral view of the actions that are being played out.
Well, since we are talking numbers, let me end with that, and I'll give each one of you 10 seconds. Bhavin, I'll start with you. Where do you hope to end this financial year? We're at the end of the calendar year, but where do you hope to end this financial year? And what's the target for the next year?
So we're going to see very healthy, significantly high double-digit growth from last year to this year. And the target for the year after that is obviously to, as an overall business, become extremely profitable. We already are, but to sort of take that a few notches up. So that's really our goal for the next year or two. Our goal obviously is to get to a level where on EBITDA we're able to get good growth. But our growth in terms of percentage is to grow a healthy, again, double-digit percentage growth on EBITDA as well, which is very, very possible, and we're confident of being able to achieve that.
Srividhya, this fiscal and the next, the target.
Yeah, so we are, as a company, we are very focused on growth as well as in profitability and not compromising one over the other. So we will be having about double-digit growth in our revenue numbers as well as our profit. We will be profitable in spite of investing on the growth that we'll be doing. In this fiscal, I think it's a public number, whatever we have published already. We crossed $100 million ARR already, and our growth numbers are really good. So we will also be profitable.
Okay. Ananth?
We want to continue to actually do something very similar to what both Bhavin and Srividhya have said. We're a 200 million run rate business. We're EBITDA profitable. We want to continue to remain EBITDA profitable, and in the consumer internet space, continue to grow at good double-digit rates, right? So that's what we want to try and do. For us, the one nuanced view is I'd love to actually have our 6 breakout brands become 10 breakout brands, and for the brands to become more known, because we're really building brands. I think revenue and EBITDA are an outcome, but if we can actually build consumer love brands, I think the outcomes follow. I think that's a lot of what we're focused on.
Amitav, I'll give you the final say.
So for us, I think at least half financial year, half yearly, we were up over 50% over last year. On the bottom line numbers, it's been slightly tough going because fuel and manpower inflation, these are our biggest costs. So we are managing, I think, better than the market while we continue to grow quite fast.
Appreciate your time, and we wish you the very best of luck. Thanks very much for joining us here on the Young Turks year-end special. Well, with that, it is curtains on this special edition of Young Turks from all of us here on the show. Goodbye, and many thanks for watching.
Recognizing the